I think it's a little bit too much of a good thing. You're certainly right that a bit of inflation is sort of helpful in terms of corporate earnings. But the problem is, in terms of Fed policy, if the Fed are wrong and the inflation rise isn't just purely transitory, then the market, particularly the bond market, will be demanding that the Fed move somewhat earlier, and that's likely to put further upward pressure on long-term yields. We're not at that point yet. I think if you look at the breakdown of the data, I think the Fed's narrative will remain that we've got transitory inflation, and I think the bulk of the market will believe that. But there's an increasing minority of people that fear that the Fed have got it wrong and that there's going to be too much inflation, and that over the next couple of years that the Fed are going to have to tighten more than they plan.
Some ranges, Mike. What do you think the straw is that will break the camel's back here? Because as you point out, the Fed is insistent it's right, this is transitory. How many successive prints of 4% or so would we need to see on CPI before we can seriously think about the Fed reversing course on tapering?
I think the critical numbers are actually the monthly CPI, and particularly the monthly core PCE numbers. And I think we'll be looking at those closely. The market are looking at those closely because that gives us a sense of underlying inflation. I think the year-on-year figure is perhaps a little bit misleading, and the market generally accepts it's a bit elevated at the moment, and will reduce later in the year. And I think we need to see a couple of months of figures. And what that means is that the June FOMC meeting, which is the big meeting on the 15th, 16th of June, is likely to see the Fed maintaining this kind of communication that it's transitory inflation, be patient, we're not in a rush. The crucial meeting, I think, probably comes in terms of the September FOMC meeting, where the Fed may have to start talking about tapering. So those are the kind of numbers that we're looking at. But then also, I think the market is genuinely looking at a very big cross-section of data as well. So commodity prices, for example, are off somewhat today because of Chinese policymakers trying to cool the commodity further. And we'll also be looking at the labour market, the breakdown in terms of the consumer trends as well in the US.